Howdy everybody. In today's video I have yet another teaching lesson about how to do stock analysis, stock picking, investment management. I already put out several other videos related to this, specifically portfolio optimization, fundamental analysis, technical analysis, backtesting strategies. I put out a video about that. So this is another in the series, okay? And again, like all the others, this is not investment advice. Anything can happen in the investing world. You can certainly make money. You can lose money too. You have to be careful. It's a very dynamic market. It's very volatile. So this is not the gospel truth about investing and how to pick stocks and so on and so forth. But this is a strategy that you can deploy to help you pick the best stocks, right? When you have knowledge and information, you can make strategic, informed, intelligent decisions. So what is fundamental analysis? It's essentially looking at evaluating stocks, comprehensive overview of a company, intrinsic value. This allows investors to make informed long-term investment decisions. And we focus on a few things in the world of fundamentals, right? We look at the company's true value. We look at the balance sheet, the income statement, cash flow statement, price to earnings, price to cash flow, price to book, ROA, ROE, things like this, right? I've got a couple of videos about that. You can check it out if you want more details about that, right? We also try to identify long-term investment opportunities, which companies have sustainable growth over time. We look for consistency and persistence of earnings, right? We want to be informed of risks and reward potentials, right? Understand the risk and the expected returns of a stock. This type of analysis helps us build a diversified portfolio, right? We don't want a concentration of investments. That's going to create a totally different type of risk. That's called concentration risk. We want to avoid that. We want to understand our risk tolerance and focus on diversification, not concentration, right? And this also supports value investing. So we try to understand what companies are undervalued, and if we invest in these undervalued companies, we could potentially achieve above average market returns, right? And over time, this can be quite significant. Now, a different point of view would be shorting the stock. If you think it's overvalued, you could sell it, and if the value goes down, you can buy it cheaper, right? And then pay back that money that you borrowed initially. That's a totally different type of investing. That's not what we're looking at today. So let's get into it. We have our Python code here, again, in a Jupyter Notebook. I do everything in Jupyter Notebooks. We have the necessary libraries to help us do our work. Okay, and we are looking at this website right here. I like this. finviz.com has all of the fundamental features for you, right? So if we look at one, we can go to Apple, AAPL, and scroll down just a bit, and we have all our fundamentals down here. So you can see market cap, income, sales, cash, dividends, options, simple moving average over the last 20 days, simple moving average over the last 50 days, SMA for the past 200 days, ROA, ROE, ROI, margins, and shares outstanding, float, 52-week high, 52-week low, the beta of the stock. So they have about 70-ish, I think it's 71 or 72 different metrics. I think it's 72. So pretty comprehensive coverage of fundamentals. Now we can go into each company's filings with the SEC and calculate this ourselves, but if this is given to us, it saves us a lot of work. We don't have to do the effort, we don't have to do the labor to get all of these metrics right here. It's just given to us. So that's pretty nice. So we're going to pull that in from this website. We're going to loop through all the items in this list right here. I have an I as a counter. We don't really need this. I just put that in because it helps us see where we are in the looping process, especially if you are doing this over several hundred stocks. You want to know how far into the list you are, and probably with thousands. If you do this for thousands of stocks, you can certainly do that, but it's going to take a little bit longer, right? So if you know it's going to have to count through, let's say, 10,000 stocks or whatever, you probably want to know where you are in the process. You don't want to just kick it off and let the thing run, but you don't know how long it's going to take. So I just added an incremental counter right there. So we're going to loop through all the items in the ticker list. Here's the list right here. If I could do Control F for ticker, this is the Oh, here it is. So this is the base list right here, base list of tickers, and here's the loop right here, okay? So let me go ahead, close that, and kick off the process, Control Enter, and you can see it's starting to pull in all the fundamental features for, not features, all the fundamental metrics for all these stocks listed in this data set right here, okay? So it's almost done. We're coming up to the end here. I'm going to print the list just so we have a quick visual understanding of what this is composed of now. So we have the list of tickers here, AXP 19.87 for the price earnings. Let's go check that. Just do a quick sanity check here. Okay, P 19.87, EPS 13.6, and that's what I'm seeing here. And insider owned is 13%. Insider owned is 13%. And the last one here is the change over time, negative 92, negative 0.92%. Go over here, and for AXP, negative 0.92. Okay, so I think everything is working. Sanity check is done. I'm pretty confident this is doing what it needs to do. Okay, so now let's clean this up. If you look carefully in this data set here, you will see a couple of things that might cause some problems. We have an M here indicating millions, shares outstanding, so 723 million. That's good to know. Here's 15 billion. But when you start doing your analysis, all these extra characters, these percent signs, we have some percents over here, these are going to be a little bit tricky to deal with. So I'm just going to chop those off, remove that, and we're going to have an understanding that these are all actually numeric columns, so we can do the analysis. So computers don't really like language and special characters and things like that. It's kind of screws up a little bit. But once we remove these characters and we know that a B is billions, we're going to take that number and multiply it by a factor of a billion. This is going to be multiplied by a factor of a million. All these percent signs are going to be removed. So that's just going to clean up the data and make things a lot cleaner for us and easier to work with. And anything that is potentially not numeric, sorry, I'm going to convert this to numeric data type. In Python, we have just a handful of data types. There's floats, there's integers, there's objects, strings, dates, things like this. There's not a whole lot. There's only a few data types, but we're going to convert all of these into numerics so we can do some analysis. So I'm going to go and hit Control Enter. Okay, these lines right here do the conversion just to make sure it is numeric. It could come in from the website as numeric, but if you look closely at this right here, I can guarantee that's not. That's going to be an object because it has a combination of letters and numbers. This is going to be an object because, again, you have that percent sign. That is not numeric. If you strip out the percent sign and have 1.93, that is numeric. Okay, so that's what this code is doing. And by the way, you don't have to memorize all this stuff. You don't have to take notes here. I'm going to save this file as soon as I'm done with the video. I will save it as an HTML file, and I will post that when I post the video, so you can download the source code and you can go ahead and run it on your own Jupyter notebook. This would actually run in Spider too. There's several different ways to run these scripts. Right? I like Jupyter because if you're dealing with charts or graphs, you can have some very dynamic interactive graphs to work with that can give you all kinds of useful information. In this video, we're not actually doing graphs, but I like to keep everything in Jupyter. It's pretty easy to use. It scales up and scales out very well. And again, if you have to do any graphing, it's excellent for any type of graphing, right? So now we're getting down to the real analysis part. So I created a tuple here. A tuple is enclosed with curly braces. A list is going to have square brackets, right? So this is a list, and a dictionary is going to consist of key value pairs, right? There's a few different data structures in Python. Lists and tuples and dictionaries are very useful to work with. This is actually a dictionary inside of a list, inside of a tuple, right? So here's the tuple with the square bracket, and here's the dictionary, here's the key, and here's the value. Again, a key and a value. So we're actually using all three data types here. I think list is probably the most common. That's what I use most frequently, but you can certainly use a tuple, and if you need a dictionary, if you have a key value pair set up like we see here, then a dictionary will handle that very nicely for you. So this is what we're looking at. So we have benchmark. I picked PE, EPS, Income sales, PEG, this is price to earnings divided by growth. This is price to book, ROA, ROE, debt to equity, EPS, quarter over quarter, sales quarter over quarter, simple moving average for the past 20 days, 50 days, and 200 days. Now, this is a little bit arbitrary. You can pick whatever metrics you want. I think this is a very nice way to get started. These are some of the main metrics, some of the most influential, I think, to driving a stock's price. So if you can certainly add to this, to the items in this tuple here, and create more, right? Because you have about, I think it's 72 over here total. If I copy and paste this to Excel, let me see if I can real quick. I think you have 72, and you can do this for any of these features, right? So, whoops, I think I have to put this into a text file first to remove the formatting. Sometimes they come in with some funky formatting. Okay, Control X, go over here. Just want to measure this, so this will go over because the index isn't indicated as an index. So that lines up, 77. So you can see a count of 77 down here. Okay, so we have 77 financial metrics. So this is a list of what, 10, 8, 10, 12, whatever this thing is here. So you can use all 77. It's really up to you. I'm just trying to showcase some things that you can do in Python here. This, again, is not the gospel truth, but I think this is definitely a good place to get started. And I think these are some of the most influential stats that really drive a stock's price, right? So I think this is definitely a good starting point. And again, some of these are a little bit arbitrary, like PE of 10. Is this the best type of PE? It's not necessarily. It kind of depends a little bit on the industry, the sector that you're looking at. Some companies will have higher PEs inherently, in some sectors will have lower PEs, but overall it is a good place to start. EPS equal to 5, again, is that the best number? I can't say it is, and I can't say it isn't. I think this is a good starting point, and again, you can play around with these and you can tweak it to match your needs. A PEG of 1.5, personally I think this is good. I've been in the finance sector for close to 2 decades here, so almost 20 years on Wall Street. I think this is good. I think ROA and ROE of 5 is good. If you have higher, it's better. If you have lower, it's not quite as good. SMA of 1, 2, and 3. I think these are good numbers here. Oops, I just noticed a typo. 1, 2. But again, it's up to you. You have to do test these and see what really matches with your specific needs and see what works best for you. So this is just a starting point. I think this is decent. You can tweak it any way you want, right? That's what these things are, very customizable and very flexible in terms of what you can do here. So I'm going to look at these metrics that I have predefined over here. The PE, I'm saying if this is less than my benchmark PE, this is going to be a buy, right? Because you want a lower price to earnings, so lower is better. It means the earnings is higher. If the price is $10 per share and earnings is 2, the PE would be 5, right? If the price of stock is 100 and the earnings was 2, the PE would be 50, right? So lower is better. It just means that the stock price is lower and the earnings is higher. If the stock price is high and the earnings are low, is that really something you want to invest in? If you have a stock that's $500 a share and earnings per share is $2, is that a good investment? Probably not, right? That's a pretty expensive stock. Now there's exceptions. Maybe that could be a good investment long term, but lower is typically better with the PE ratios. It just means the price is cheaper and the earnings is higher, right? So it's a good combination to have. So I'm saying if that is lower, if the PE is lower than the benchmark PE, which is this right here, then that is going to be buy recommendation, and I'm going to take that and append that to this list here. You see the square brackets again, so this is a list object. Here's your dictionary, you have your key value pair, and here's your tuple. These are the 3 most common types of data types that you find in Python. So lower is better, recommendation buy. If PE is higher, hold it, otherwise we're going to sell the stock. So it's the same logic for all of these down here, okay? So if earnings per share, so this one's a little bit different. So you want higher earnings per share, right? And the PE you want lower is better, If the earnings per share is higher, that's actually better because it just means that the stock is earning more. The earnings per number of shares outstanding is higher. So you want a lower PE that's cheaper stock. You want higher EPS, right? So here, if higher is greater than the benchmark, buy it. Otherwise, we have a sell recommendation. So all these follow the same kind of logic. You have to do a little bit of research. Sorry, you have to do a little research and understand what these financial metrics are doing, and then apply the right logic, right? So if income is higher than the benchmark, that's better. It means your company is is earning more. The income is higher than the benchmark, buy it. Otherwise, we sell it. Same thing here. If sales is higher than benchmark, buy it. Otherwise, sell it. So it's the same logic throughout. You really have to understand these metrics. That's the key here to make these decisions. But otherwise, the logic is pretty straightforward. Debt to equity, you want lower debt to equity. If the company has a lot of debt and not a lot of equity, that could be a ticking time bomb, right? So if it has no debt, that's really the best case scenario. So companies that are very rich with cash, Apple, Facebook, Google, Microsoft. I don't know offhand what the debt to equity is, but I'm guessing it's pretty low. Unless they're paying low interest rate, maybe they will keep some debt. Some companies keep debt on their balance sheet, but ideally you probably want lower debt and higher equity, right? And the difference is going to be the assets that the company owns, right? That's the whole balance sheet. So I would say to you, if you don't understand these metrics, go ahead and do some research, Google it, and figure out what these mean. And then, of course, you can change this logic to be anything you want. So I'm going to go down here, run the script, Control Enter to run it, and here we have the final recommendation. So based on everything we saw before, the pre-E, the sales, the income, all this is the recommendation here. Sell these stocks. B of A, this is Boeing, this is a buy. There's a couple holds. I see a hold there and a hold down here, and just a couple of buys. TRV. There's another sell there. There's another hold. A lot of these are sells. If we go look at this BA right here, take a quick look at this guy. So Boeing Corporation, and let's go over here. PEG, actually no PEG. Price of sales, that's good. You want that to be low. Price to cash flow, there's no number right here. That's interesting. We probably want to get that filled in. ROA, ROE, ROI, we have negative here. And then the beta 1.56, so this is 1.56 as times as volatile as the market. The earnings per share actually negative, but next year it's supposed to be positive 1.8. Next quarter, yeah. So Boeing's had some problems. I'm sure you've seen it in the news, right? They had some major issues that they were dealing with about for most of 2024. I think early in the year they were plagued with issues, but I think they're turning the corner and coming out of that pretty soon. And TRV is going to look like this. Okay, so this looks pretty good. PE 12. Price to book 1.9, price to cash flow 6.05. That looks pretty decent. This looks like quite a good investment here. EPS trailing 12 months 19.5. That looks good. Beta 0.63, so less volatile than the market. ROA, ROE, ROI, all positive, all looking good. This is a good return, right? Return on investment 12%, return equity 19%. Whoops, I didn't mean to click that. And ROA 3.84%. So I can see why this is a buy recommendation, right? This looks pretty good. Let's see one sell. Apple is a sell, AAPL. Oh, this is the first one we looked at, right? Let's go back there and look at this guy again. So price to book, price to cash. I'm seeing some big red numbers here. Not looking good, right? A lot of red down here. Current ratio. Let's see. Earnings per share 6. EPS this year 21%. That's pretty decent. Sales up 2%. ROA, ROE, ROI pretty high. Where's the debt? DBT. Debt to equity. Yeah, so they have a lot of debt actually. So I misspoke before. Capital should be pretty cash rich, but they actually have a lot of debt here. So they must be paying a low interest rate on that debt. You'd have to read the financial statements filed with the SEC to see what kind of interest rate they're paying. We're not going to get that from this data set, but I guess it's pretty low. Otherwise, it doesn't make sense to have that much debt. It's 2 times the equity, right? Debt to equity. But they do have some decent ROA, ROE, ROI numbers. But again, it doesn't match the logic over here. So it doesn't pass the test of price to earnings, right? Earnings per share, trailing 12 months, income, sales. This is not passing the litmus test here, so it's getting a sell recommendation. So yeah, that's pretty much it, guys. Just wanted to take you through that. I will share all the code with you so you can copy, paste that, run that in your own environment. Modify the code, add, subtract, enhance it, embellish it, do whatever you want. I hope this was a good learning opportunity for everybody. I learned a couple things when I was putting together this script, and I hope that you will learn something too. So that's pretty much it. I'm going to wrap it up, and I will post this video very soon. Thanks for your time today. Have a great day, everybody. Bye.